Yeah, boy! Base, how low can you go? Death row, what a brother, no, once again, back is the incredible rhyme animal, the incredible D, public enemy number one. Yeah. Hey, good morning, everybody. Oh, what's that? What's that on your screen, Wayne? That looks very interesting. Oh, don't look at it. Never mad at the fact he's corrupt like a senator. Hey, so good morning. My name is Wayne. Welcome to Forex.Today, the YouTube community of almost 14,000 foreign exchange traders. We like to meet here once a day, realign our satellites, synchronize our watches, screw our heads on straight, but we're here to support each other. I've been doing this a very long time, so I'm here to share my experience with technical analysis, fundamental analysis, global macroeconomics, trader psychology, and just being a good all-around teddy bear. So let's go. 198's are booming in my trunk with funk. All you punks can't stop my dunks. Man, I gotta find those tapes. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. That's right, Yo says rich people don't sleep. That's right. They pay people to sleep for them. Yeah, money never sleeps, brother. So, hey, good morning. Welcome to Friday. I am so happy. Yesterday we had such a good group meeting. Just super awesome. So I'm in a super great mood. Yeah. So, hey, Forex.Today is sponsored by tradersway.com. Please visit tradersway.com and open up a demo account. When you're in your back office, it'll take less than 30 seconds to get there. You can download MT4, play some demo trades. You'll see the execution speed is fast. You'll see the spreads are narrow. You'll see the swaps are amazing. And if you need it, world-class customer service, roll out the red carpet, white glove treatment just for you because you're their sweet baby. Now, why sponsor something like Forex.Today? Why do it? Because they actually want clients that can be profitable, because profitable clients tend to stick around and trade for years and years and years and years, and therefore they can provide a service and earn an income. You're happy, they're happy. It's called a symbiotic relationship, and it's much more interesting than just having people drop $200 into a micro account, blow it up in 3 days and disappear. That ain't a business. So they want you to succeed. It's in their best interest for you to succeed. So that's why I'm here, to provide some sort of education so you can develop the confidence and skills you need to trade real money. And then one day, hopefully, when you're ready, you'll choose Traders Way as your prime broker to your successful Forex trading business. While you're here, guys, would you do me a favor and tell YouTube that Forex.Today is valuable content? You do that by liking, you do that by subscribing, and of course you do that by leaving comments on the recordings of the videos. And check this out. I got something up my sleeve, baby. Remember that whole thing about using regression analysis as well as standard deviation analysis and all that kind of stuff, and saying, well, that's interesting because when you combine those two things, you're basically getting pivot points, but pivot points measure overbought and oversold conditions of the market per se, or at least areas of buying and selling based on the market. And I said, wouldn't it be interesting if you simply had pivot points not based on market, but price action? Well, there it is. It's doing very, very similar things as these pivot points, except it's just measuring these candles, or on a daily basis. That's what the month of May has looked like. Ho, 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 ho! Wee, wee, wee! Looking very pretty. I got it for MT4 and MT5. Oh, yeah. Uh-huh. That's how it works, brother. So I'm going to play around with these and test them. And then if you're a client of or a customer of metatraders.com, you'll just get it as a free bonus. I know, right? So cool, right? Neat. Cool. So we'll play around with that. So here we are on a 1 minute chart. And it's finding that we're still climbing up, climbing up, climbing up, climbing up, climbing up. We need to make that higher high if this is going to remain bullish. Morning, Jules. I'm hoping to do that today. There's just always been tweaks. So I've spent hours and hours and hours and hours and hours doing that. But I'm hoping, in fact, the guy just pinged me now. I'm hoping to release it. So I'm very, 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 very close. Okay. Cool. Euro very strong today is what Blue Boy said. Well, let's check that out. Let's find out how true that is. Okay. Well, is euro strong? Well, yen is weak, dollar is weak, and Swissy is weak. That's cool. So those are the three things I wanted. Does that make euro strong? Well, euro is strong. There's no doubt. Relative to everything else on the planet being weak, yeah. But I might describe it differently than euro strong. But either here or right. But whatever. So yen is weak, dollar is weak. All right. So that's really cool. Typically, a risk-on currency does pretty well in that scenario. Okay. So you could look like at an Aussie yen. Yes, you do, Hassan. Okay. So check this out. There's your monthly. What if your monthly looked like this? Swing price action pivots. Throw down some pappy. Okay. You like that? Now you're going to say, well, that's just given in here. So what you're going to have to do is find out how many candles you should be counting on your on every given time frame, because you should on a 4 hour you should be counting more candles, right? So check this out. Here's how you handle that. Okay, isn't that nice? And then when you set a template that you like, you go to templates, save template, window opens, you find it, swing price action pivots, you hit save, it overwrites, and now you have that forever. So now it'll always measure 144. So on the 4 hour, that's what that represents. And of course, here's the math. Let me get rid of this, because that's easy. There's the price action, but you don't need price action pivots for that. This lower bound, this part here is 1 standard deviation from the mean. This is 2 standard deviations from the mean, and vice versa for the bottom, right below the mean. Isn't that cool? So you're like, I wonder if it's trending down. I can't tell. Isn't that neat? You think that might be helpful? the middle. That's what mean essentially means. Mean is average. It's not median or mode. It's the average. So to me, the average is irrelevant. Okay. So like someone might look at this and say, well, from a bearish point of view, this is now becoming overbought. You understand that? Remember, none of these indicators tell you what to do. If you're already a bear, you'll say, well, okay, we're approaching that level where we're more than 68% overbought and getting higher and higher as we go. So this might fit perfectly into a bearish point of view in the sense that they're not ready to sell. That's not what this tells you. Remember, if you listen to an indicator, like if you look at an indicator and it makes you sell or buy, you don't know how to trade. All right, you don't get it. You're not on the clue train. Said differently, if you're already buried and you're waiting, well, at least now you know you're about 70% overbought, and at least you can get ready, right? You're not ready to sell, but you're getting ready to be seriously thinking about it. And so, like, if it rolled over here and came down, that'd be all right, okay? But you notice up here, it'll be 95% overbought, 95% overbought. 95% overbought, plus, you know, your pivot points. You know what your pivot points are telling you. So you could say, well, we could really end May hot, hit this early in June, and that's my signal to be short the entire month of June and probably July. So you have to put a combination of things together. You have to already be a bear. You have to understand what the indicators are telling you, and you have to be able to think ahead. So there's your plan B, and this is your plan A. And you're done for the entire month of June. No, now YouTube, it does everything automatically. Check it out. You're like, well, what about on the 30-minute? There it is. Okay? I'm calling these price action pivots. Price action pivot points. PAPI. Yeah, like Samuel, why would you care about average? You don't care about average. You care about extreme. Because you're talking about reverting, okay? Okay. Okay. Pretty cool. I think they're pretty. So we'll have to play around with it for a month or so, see how to adjust it properly and all that kind of stuff. Cool. So let's look at dollar pivots, yen pivots, gold, oil, Bitcoin. Okay, these are all dollar pivots. Pound dollar up on the 4. Euro dollar up on the 4. USD CAD down on the 4. USD Swissy down on the 4. Kiwi dollar up on the 4. Well, this fits my mold perfectly because I'm bearish on the US dollar. So that worked out really cool. Do 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 bum bum. Okay, that's where we sit. Notice that we have an inside month. You notice that? Because of the month before? That's disconcerting because if last month was consolidation, this month was consolidation, June might be consolidation, and then July and August is likely to be consolidation. Capital markets is okay. It's not really capital markets, but I remember though, Summer, professionals know how to make money, or Blue Boy, I mean, professionals know how to make money in the summer. It's not a problem. Those that don't know how to make money in other times of the year don't know how to make money in the summer. So yeah, summer doldrums, but I don't think of it that way. I just have to change my strategy. Okay? So I don't look at it as a bad thing. I look at it as a different thing. Okay? So be careful with your language because you're listening to yourself. Yep. Yep. Be careful, be careful, be careful, be careful. All right, so WTI. Okay. Now, that might be too much. So we'll have to figure out, right? This is probably better on a 55. I mean, you have to figure out what works for you. Okay. So for example, if it now does this, that's very statistically important because statistically that's not likely to happen based on the scatter plot you're measuring. Okay? So in that case, that would be wonderful for bears next week if something like that happened today, right? Okay, drop it into a smaller time frame. Right? We'll find it. So looking at this going back to the 20th of May, and it's the 29th of May. So going back a week, week and a half. Seems like this is mostly sideways, don't you think? And in fact, we're pretty close to the mean. The mean is probably somewhere in here. So it tells you that based on that analysis, I mean, that's not everything, but that just tells you you're in the middle of a range, probably not a good time to trade. That's why I was, when whoever asked earlier about where's the middle point, there's really no need for a midpoint because you shouldn't really be trading there. That shouldn't be the reason why you're buying or selling. There might be other reasons which you're going to fold into your technical analysis, but when it comes to like this analysis, we just know that this is a place where bears are likely to take profit, or maybe bulls get in, and this is, you know, essentially overbought, and this is essentially oversold, right? in this time frame. So if you happen to be a bear, selling here is probably not a good idea. Okay? If you're a bear, what you should probably look for is a break below the support, and then you say, aha, I'm going to sell the next lower high, and you're going to wait. Okay? Now, you'll notice it'll almost inevitably be the same price, except you have significantly, exponentially less risk associated with the trade. And that's what we're trying to do. Okay? So you're just sitting here. I look like this doesn't make me that excited. Someone else might be trading it on a different time frame for a different reason, and they would be excited. That's cool. So instead of getting excited, though, I'd rather you say you're going to sell it at 132.50, or sorry, 32.50 if you're a bear. And it's not that exciting. You're just waiting. And you're like, okay, well, it's going to make a lower high today and make a lower low today. And that's all part of your trade plan. You got your logic and your reasons. You picked out your price, and you're waiting. Like there shouldn't be any real excitement with your trades, because most of the time you're waiting for the pullback. The fact it's doing something now. Well, you sold it in here, let's say, and well, of course it fell. That's why you sold it. So that's not that exciting. Okay. Now, typically, this is where you do get your move for the day for New York. Okay, so there might be up and then down. Okay, that's one logic. Or two, right? Up and through. Okay, if you're a bull, that's what you're going to think. Okay. Typically, when you're using price action to get into a trade, you're looking for all this kind of stuff. But the issue that I have is that the price action here is dead. So you had this move, then you had 100% retracement. So you are now range trading. The trend is dead. Okay? The trend is dead! Long live the range! Long live the range! So, yeah. So I don't get excited about that. I'm like, huh. It's more like reason for pause, if anything. Thunder and the lightning. Gold. Well, we started the period here. We expected a drop to here for profit taking. So gold dropped, hit our target, and people took profit. That's exactly what it says in the training course. Okay? Cool. I wouldn't call this a trend. Okay, not yet. But I think you're going to see something up in here. Also, the interesting thing is, in this period, if you counter trend trade it, the target is here. So that kind of all folds in, right? So when you were here, you were thinking here. And then when you're at the X, you were thinking here. Cool, all that's happened. And notice, if that fulfills its mission, it doesn't mean we have a trend. It just means this for now. Okay? If it was trending, this would have happened long ago. Oh, right on. Thank you for the positive feedback. Free AMF22. A. Lou bought the bottom. Very cool. Very cool. So one of the things I've done to train myself over the years is I've trained myself to say that this range will last forever and ever and ever and ever and ever. I don't anticipating it breaking ever. As far as I'm concerned, we are never going to make a higher high. Okay? And the reason for it is the assumption is irrelevant and typically wrong. If you were right and it breaks, well, then you're wrong on the range part. Okay? So I have trained myself to say this will never never in a million years make a higher high. But when it does, it's relevant. Okay? You see what I mean? Like it will stay range bound forever and ever 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 and ever. It will stay sideways forever until it breaks. And the break itself gives you pause, and then you wait for the next pullback. Because what is your prime directive as a global macro trend trader? Spot the trend. That one's hard to see. Spot the trend and buy the pullbacks. Spot the trend and sell the pullbacks. That's it. So the most relevant information is the breakout so you can buy the pullback. That's it. That's all we do. And if you're not in a trend, you should be very careful. The swing trading template, $5. What indicator am I showing for pivot lines, pivot points? They're at metatraders.com. Okay. And of course, we have this one, which is brand new. Okay. That shows you your longer term move for gold. Okay. This is saying based on the data you're measuring, okay, and of course the math is y equals mx plus b, m being the slope, rise over run, and b being the intercept. Okay, so in that case, using that kind of math, which we've integrated here, and then calculating the standard deviation from the mean, and then calculating 2 standard deviations from the mean, we have ourselves essentially pivot points based on price action. And it's just saying that there, when you do the math, there's a slope to the central pivot. Okay. So there's 2 different things going on here. Now we have pivot points of market and pivot points of price. Okay. Well, y equals mx plus b is not geometry, it's algebra. And then standard deviation is statistics. You'll also learn y equals mx plus b in like pre-calculus, because it's used for calculus as well. When you're measuring sort of convexity of curves, you would start with measuring the curve and measuring. So like in calculus, you'll have a grid, right? Right, like this, with data plotted all over the grid based on your data set. And then you'll have something like this, okay, which are your intercepts. And you're going to then look at things like, you would have data points all over here, and you're measuring the data points. Okay? And you'll notice that there's a couple of things here, not much up here. There's a lot on the high, there's a lot in the low, quite a bit in the middle. So now you're going to measure all of those and say, well, the average seems to be in here. And of course, you're also measuring the rise over the run, which gives you that slope. And here's your intercept. So now you're doing things like, okay, y equals mx. Now m is this slope, rise over run, plus, right? And you're solving for x, or in this case, well, you can solve for x or y. And b is the intercept, which is here. So m is this thing, b is this thing, okay? And then you can solve for your equation, and you might be, there's all kinds of reasons why you'd be doing that. And of course, it might be one step in your calculus. And you might have to do it multiple times if you're doing convexity and all that kind of stuff. In this case, what we're just looking at is, here's our scatter plot, and there's lots of data here, and there's some data here, and there's some data way up here, and there's some data up here, and you're looking at it, and you're saying, okay, well, that's interesting, because the first thing you notice is somewhere in here, you have an average, and then an average of price at this time, an average of price at that time, an average of price at this time, average of price, and then, and then you have to, there's your, in this case, it's the other way, right? Rise over run. So there you get your M, and then intercepts. I don't know where the intercept would be on this, but anyways, you're doing your calculations, and then you have to say, well, when it is far from the mean, how far from the mean before it reverts, and when you're down here, how far from the mean before it reverts, and you get all this and blah, 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 blah. You get price action pivot points. Okay. So anyway, cool. We'll see if it works. It might be nonsense. At least it's pretty, right? I'm sick, but I'm pretty. I'm young and I'm underpaid. Yeah, yeah. Cool. So, yeah. So there's your gold. Okay. Silver. Okay. Daily, it's very overbought relative to before. That doesn't mean anything, except statistically speaking, if it continues doing what it has been doing, then it'll have, statistically, it has reverted to the mean. Okay, but that might, right? On a smaller time frame, it's been moving up. You know it's been moving up because it's done this, right? So as it moves up, it makes little higher highs and higher lows, higher highs and higher lows, right? Up, 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 down, down, buy, up, 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 right? And this is saying it's ready for a down, down. Go into a smaller time frame, and you're measuring that. You can go into a smaller time frame. Okay. So what we're trying to see is, on this time frame, on an hour for silver, it's saying it's based on previous data, 95% of the time, price stays below the line we just touched. Okay? 95% of all the previous candles measured in this study, okay, your data set might be wrong, but based on all of this, 95% of the time, price stayed within those black lines. Okay? So that's one thing. So you might say, based on that, that's pretty expensive. I mean, you wouldn't want to buy silver up there, would you? Okay. Now, the second step is, this is your bearish sell pivot for June. So what are the chances a bull takes profit here and is happy with 95% of the price action in their pocket, and a potential rollover right there? Now you're combining market pivots with price pivots. So that would be it. What's up, Fu Man? Mama didn't raise no food. Okay. Okay, so we don't know. These are just algorithms. So now you'd say things like, okay, well, there might be a bear lurking here, and this might be a top, this might be resistance, this might be overbought. So now, on a small time frame, what you need to do if you're a bear, you could just sell here at the top. I'm not a big fan of that, but you could. I think it'd be amazing if I was a bear to say, okay, this is going to be the top. And then you get this, which is expected anyway, so that's not that surprising. But what you need is this, which means, let's say Monday, London Open, you get that, you short it, and you're not interested in 25 pips or whatever silver's worth, but you're interested in that. So you're going to sell it at 17.50 and you're going for 14. And you enter it just like you'd enter a 20 pip scalp, except you're not interested in a 20 pip scalp. Okay? If you don't get 350 on this, you're upset and disappointed. Huh? Coffee break. I'm sick, but I'm pretty, yeah. 'Cause I got one hand in my pocket. Oh, that's weird. I wonder if I can fix that. Webcam source. I guess that's it, huh? Nice. So fresh and so clean, clean. Cool. Oh, gotta love that 1 minute double cappuccino. All right. So anyways, interesting. Thank you, Alejandro. Okay. Okay. BTC. Kind of farting around. Does this make you excited? Okay. How about that? Which one's better? Hola, Victor. What do you think? Well, one of the things you can see on Bitcoin is that as a bull, if you're a bull, and you can say, well, the market is more bullish than bearish, that's what the slope is telling you. The market was expecting to be up near 1150, right? 11,500. So the market didn't fulfill its destiny. So the analysis isn't predicting the future per se. Right? The indicator's not telling you anything besides rise over, run over time and standard deviations from that mean. That's all it's telling you. It doesn't tell you the future. So now it's your job to say, well, if we didn't breach 10,000 and make a serious attempt to get to almost 12,000, like we're about $2,500 less than we should have been based on previous performance. So for some or for many, that's a vulnerability and someone's going to take this down. So again, do not rely on any indicator to tell you what to do. You don't look at that and say up, okay? You look at that and you interpret it based on your bias. Remember, if you don't have a bias, you're not going to be very successful. So if you want to bring Bitcoin down and you don't think it's got the guts to breach 10,000, which is right here, right in here, then you're looking at this and saying, okay, well, I mean, this didn't hit its target. We didn't breach the psych level. We're nowhere near where the market was supposed to be based on pivot point theory. And bulls don't got it. They had the chance multiple times. They've had a month to do something with this. It ain't happening. Okay? And there's your halving, by the way. So you're like, so that whole halving thing, blah, 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 blah. And so you might actually be looking at it this way. Oops, I wanted that to be blue. Come on. There we go. So a bear is going to be looking at it this way and saying, all right, they got permission. They got this. Thank you, Hassan. Okay. Oh, hang on. Okay. So you have to know which one you are. Are you a bull or are you a bear? Well, if you're a bull, you love these prices. Okay? You love these prices if you're a bull. Okay? Because you know someone's front running this. I don't know why they're so aggressive. I don't need to know why they're so aggressive, but I know if you're long at 8,800, you know exactly what you're doing as a bull. Thank you, JM. Well, you know, the opposite are, you know, some people are like, don't use any indicators. I'm like, that's really silly as well. You need to have proper tools, know how to use them, right? But the plumber, you know, you don't call a plumber and they're like, why are the pipes leaking? I don't know. Let's see what the old wrench says. Right? You see him tapping the pipes with the wrench and you're like, what are you doing? He's like, I don't know. I'm waiting for the wrench to tell me what to do. No, you're a plumber. You need some education and some backgrounds, right? So why don't you learn plumbing and then use the tool, right? But, well, you know, so the great part of that, Mr. Highfield, he says, we don't need colors, right? Okay, so this is where, when I asked the question during that part of the presentation, I'm like, well, recognize what your brain is telling you. Like, what is it that you are missing? Right? Don't get caught up that there's no colors on your candles. Do you want colors on your candles? Why? And do you miss pivot points? Which ones? Why? And really, I would write them down. Like, I would seriously think about it and write these things down. Why do you miss them? Why do you use them? How do you use them? What is the important information? Right? So, for example, if you were a bull on this, you can remove the irrelevant information. And you could just add the relevant information. And that's what this is telling you, right? So you don't need all the other lines if you're a bull. Cool. Okay? And like, I set this up looking like bulls had their opportunities, so there's probably a lot of bears waiting to sell. And of course, they're removing all the bullish information. They're only doing the bearish information. And you have some sort of step down going on here. And we already knew that because you can see the trend lines. But what information are you missing? Why? And how do you use it? And really write them down and document how you use them. Okay? It's not enough to just say, I need more information. Why do you need more information? And understand really, truly how you use them. Metatraders.com. So this is just selling. So do you see where I said that, right, that if you are a bear, you've already got this analyzed. Okay? You already have this analyzed. And you're not a bear because of this. You're a bear because you don't believe in Bitcoin. Or you're risk off based on global macroeconomics. And when risk off hits us, because that's what you're predicting, the dollar will get strong and Bitcoin will get weak. You know that. That's why you're doing it. So now you're waiting for all of that. And these tools are helping you measure market conditions. You already know what you want to do, and you already know why you want to do it. So now you're dropping into a technical chart and you're asking yourself, okay, I want to sell Bitcoin because I don't believe in Bitcoin, or I think there's going to be a risk off move in global macroeconomics. I think the dollar is going to get strong, whatever. So you're like, okay, is this a good time to sell? Yes or no? And based on that idea, it's not a bad idea. It's not a bad time. Okay? Because you tested 10K, fail. Then you tested 98, fail. Now you're going to test 9.5. And what are you predicting? Fail. Okay? And look, your target is 8232. That's it. There's your trade plan. Did anything on this chart tell you to sell? No. Because I could reverse this whole thing and show you a bullish point of view, and the bulls are going to do what they're going to do. And the bears are going to do what they're going to do. And if you kind of like wait for your MACD to tell you what to do, you're never going to be correct. Okay? You understand that? So, if I can get 20 people to put together a presentation on why Bitcoin is not going to break 10,000 and instead it'll fall, I could probably get just as many people to write a presentation on why Bitcoin will break 10,000 and rise. You need to know which team you'd be on. Okay? Okay. For example, I think a bear is going to say, we've gone 1, 2, 3, 4, 5, 6, right? Basically, not quite, but we've gone a long time without making a true higher high. Yeah, would you take the moment and click the thumbs up button? It doesn't do me any good, but it does tell YouTube that this is quality content. Would you take the time to do that, please? Thank you, everybody. Okay. Now, a bull in this scenario, especially if they're looking at a smaller time frame, they're looking for a buy. Okay? They want to buy here. I think they should be cautious of this. So it's all based on your interpretation, and you interpret through your bias. You know, at Harvard, we always talked about papers, writing through your lens. I'm like, what are you talking about, writing through your lens? Well, that's like your bias. If you're a bull, you're gonna highlight with your lens bullish points of view, and you're probably going to minimize bearish points of view, and that's just how you see the world. Okay, cool. So a bull was thinking this, but I'm telling you, they probably should have done that. So based on that information, a bear is probably saying, aha, this is my op. Low, low, up, 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 right? Down, 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 up, up, and they sell it right here. And you are done for the day, done for the week, and you're probably done for the month because you're a badass trader. And you're going to make thousands of dollars on this, right? Or you are going to break even. So let's see what that trade is worth. This is going to drop to 8224. Is that very much? Is that a weekly or monthly? Where did I get this one wrong? Ah, wrong one. Oh yeah. The heck? Why is it not loading? Come on now. See on a 15-minute chart how easy that is? Simple price action. If you're already a bear, you're not going to miss this, dude. Come on. Why isn't it drawing monthly? Let's try this differently. Template. Do I position trading monthly bearish? Okay. Okay. So based on that, we're on our way to 7,300. Okay. Based on what you just did on a 15-minute chart, you're going to sell Bitcoin at 9,500 or 9,400, and you're going down to 7,300 and something. So, okay. So let's just call it $2,000 drop in Bitcoin. You're going to scalp it for $2,000. Okay? That's what a bear would think. Of course, a bull would say that's nonsense, but you need to know what you want to do. What do you want to do? Hey, Mike, I don't know what you're talking about. Is that a new coronavirus? Oh, yeah. I don't know nothing about that. I like money. Cool. Okay. Do you understand the logic there? If you're a bear, you're ready, willing, and able to take those trades. You know it's coming, right? You know this is your sell zone. I mean, you already know all this. So you're like, I want to get short. Maybe around this trend line, maybe inside this zone, maybe just below the psych level of 10,000. So you're like, wonder what I'm going to do at the New York Open today. Okay, there's a double top. Right? All right, here's a lower low. I'm going to use some price action here. What am I going to do today? I'm already a bear. I'm in my monthly sell zone. I'm on a 4-hour trend line down. I have a double top. I have a lower low. I think I'll sell a lower high. Yeah. Yep. 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 Telephone. Telephone. Yep. 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 Now the cool thing is you have to choose now. Are you going to make $20, $200, or $2,000? Which one? Yep, 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 yep. Cool. So, and kind of attaching to our group meeting last night. If you're in my group, you got your monthly set, you got your weekly set, and now you're here all the way drilling down into like 15-minute charts. You understand, like, you have congruency amongst your time frames and amongst your strategies. So you'd just be doing this all day until it stops doing that, right? Sort of like that range I was telling you about. As far as you're concerned, this is going to do this forever and ever and ever and ever and ever until it stops. Now, we all know trends take pauses, and we have statistical tools or algorithms that help us predict when the chances of retracements and reversals happen. So therefore, you could do stuff like change this now to day trading at bearish. Okay. Okay. So today, what you're hoping to do, all right, Today what you're hoping to do is down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 down. Double check, is that right? Yeah. Okay. That's what you're going to do for the rest of the day. Okay. Now, you know, based on this, a bull is going to try to buy here, so you need to be careful around there. Okay. But it's one of those things where this is likely to, you know, let's try a little bigger. It comes down here, a bull's going to buy it, and then it's going to come up, and a bear's going to sell it. That's it. Okay? And you're going to be challenged like that over and over and over again because the bull's going to buy it here. And then there's going to be something here. But eventually you get on the free and clear plan where you're through the short term up and you've made your way down, and now it's much more bearish and you've broken all bullish moves, and bulls are frightened and hesitant to trade against you. Okay, so you know you got probably a week's worth of work for all of that to happen. Now, for a scenario like that to occur, you're going to need the market to go risk off. And there are multiple events that would create that, but you're using your algorithms here, your indicators, to tell you, are market conditions favorable to a risk-off trading strategy? Okay? Once you got market conditions favorable, you don't need anything but candles. Because now it's just price action. Okay? So, does this clearly look like a downtrend? Well, you got some work. But is this where a downtrend might be created, might be born? Yeah, could be. If you're already a bear, that's what you're looking for. And so if you're a bull, pay attention, bulls. You didn't have the confidence to break 10,000. Bears can sniff your weakness, your hesitation. Yeah, it's a good idea, Ryan. Kind of defeats the entire purpose of everything, but... You know, I'm not tracking a gold to oil ratio, but it's interesting. So if we get a risk-off move in June, be ready to crush exotics. Because that would be extremely bad for exotic currencies. Okay? Euro lira is up. Dollar lira is up. So Turkish lira is already being crushed. Okay? So if global economics deteriorate, then these ones are going to be hurt. And you ain't seen nothing yet as far as exotic weakness. So lira, if it's hurting now, boy, if things get bad, things are going to get worse really quickly for Turkey. Okay? Now, the better performer as of late in exotics has been South African Rand. The data hasn't been as bad as it could be, which is good. Okay? So this is very similar to an old man easing into a hot bath, right? And all of a sudden, lower low, lower high. So if you were a risk-on trader, you're looking for this. If you think things are going to get worse, okay, we're going to pop back into the range and then break to the upside, because if global macroeconomics go bad, that's going to be a real tough situation for South Africa, who's trying to export commodities to the rest of the world. Well, if the rest of the world ain't buying, things are not going to be good for South Africa. Remember, they lower their inflation by increasing the value of their currency. And when the world isn't buying stuff from South Africa, the government's still going to print rand to pay for bills. And that gets really bad really quickly. So you'll see that exotic currencies, in particular ones that are, well, I guess by definition, they're typically emerging markets. They're very sensitive, right? The sensitivity is high. Another way of looking at that is duration, right? Duration is actually not time, but the volatility. The sensitivity of South African Rand to global macroeconomics is quite high. Okay? In particular, their debts in other currencies. So yeah, they're going to be very sensitive. So if things are good in the world, this is going to happen, and South Africa will benefit because their currency will appreciate, and that will lower inflation for the good people of South Africa. Okay? Okay? And so, who just put it? So Samuel says risk off is underway at the moment. So therefore, you would have to ignore this, and your assumption is up, down, up. Okay? Well, so I don't know what the future is going to be, and you might be right. Risk on, or I mean risk off. You say it's underway. This chart does not confirm that. So if I was risk on, I would have to get ready to sell this. Because you might be right, but the timing might be different. So you might be thinking it's on the moment, you're thinking the entire month of June, and I'm thinking, what am I going to do the next week, right? And according to this, if I'm a risk-on trader, I will sell this. Okay, and that's the issue. And that's why bulls, which are risk-off traders, they're going to have to be conservative in this situation. Not because they're not certain of their fundamental bias, which they did the research, so they must assume they're correct, but the market conditions are not favorable for people buying this. If you buy this here, you're not going to make money. Or if you do make money, it was really foolish. You paid way too much, you took on way too much risk, and despite your stupidity, you made money. Well, don't worry about it, because you're going to do something dumb like that again in the future, and you'll lose money. The problem is it'll take you 8 times, you'll have to lose 8 times to realize the one time you were wrong and you made money, right? So all you have to remember, your bias you've done through research, okay? And your bias gets set by the fundies, let's say. So now you open your charts and you're like, you think Trump's going to send a tweet and shut down China, either blaming them for COVID-19 or retaliation for their hardline move on Hong Kong, whatever. One tweet, risk off. Okay, that's good. I like the bias. I get it. Right on. Then you look at market conditions and you're like, not yet, not now. That'd be the right way to handle that. Okay? There's no way you should look at this and say, buy. No. I mean, for example, to get a decent buy scenario, you need a double bottom, a higher high, higher low. And then you might buy at the exact same price, except this was a dumb idea and this was a good idea. Same price. One was ugly, one was beautiful. The difference being risk. Okay? So remember, set your bias and then use your technical analysis to confirm or deny market conditions. It's only scientific methodology. You understand? It's only scientific methodology. Okay? You see that? That is not bullish. That's that. But it's definitely bearish. So if you're a bear, be ready. You're up. You're on watch. Well, how about candlestick pattern? Ryan, how about that? So let's say I've decided for 1,000% I want to sell this. Okay, that's strategy. That's why my book is Strategic and Tactical Forex Trading. So I look at this and I say, okay, my strategy is I'm going to sell here. Why? Fundamentally, I'm risk on. Cool, right on, neat. Am I at a decent price? Yeah, I'm at a really nice price. So I got my price, now I just need time. Cool, so drop in here, for example. Okay, many ways of playing it depending on your aggression level. Some people would look at this and start selling this as a downward trend line. Okay, I'd prefer lower low, lower high, sell, done. Okay, super easy. Pulling the trigger is like the easiest part because you already have a plan. Okay. So if you are a bear, what do bears do? Number one, confirm the trend. Trend down. And if so, two, sell. You only sell. And three, lower highs. That's it. You're done. So wait for your first lower high. Okay. You have your roll reversal. Great. You have your funnies. Great. Wait for market conditions to be down. Lower low, lower high. Great. Sell there. You're done. And keep doing that until it stops working. Okay, you see that? I am launching all of that today. So everyone that's a customer of metatraders.com in the next few days are going to get 2 bonuses. Absolutely free compliments of the firm. And then in the future, if we like this new indicator that I have, you'll get that compliments of the firm. So if you wonder where your $5 went, well, I've spent thousands of dollars in the last month and a half, several $1,000s in the last month and a half developing these new things I'm going to give you for no extra charge. Okay. Stop loss depends on your setup, but how do you know you're wrong if you sell here? Well, first of all, if you're right and you have a lower low, lower high, you're going to get a lower low, lower high, and a lower low, and a lower high, and a lower, so on and so forth, right? Because you're a trend trader. So if you sell here and you get a higher high, do you still like your plan? No. Okay. And then, so you sell here and it drops, lower high, and then you add another one here, and then you move this stop that's up here, you move it to here. And you got your second trade here, too. That makes a new lower low, lower high, roll reversal. So you sell your third trade here. And now you move this stop, right? Now you move that to here. Okay, so now you got two here and your third entry here, so on and so forth. Okay, and you just move your stop. Easy peasy lemon squeezy. Okay, so you, like I was saying before, based on this, you're selling at resistance, and you might be doing this on a small time frame, and you'd love this, so you're selling these moves. That's one way of doing it. My preference is a little higher time frame, because you're probably doing that on a 5-minute chart. I'd rather see lower low, lower high, and then take it down. Because now I know that's not an uptrend. How many lower highs exist in an uptrend? How many lower lows exist in an uptrend? An uptrend is, right? Higher low, higher high, higher low, higher high. This is all by definition. So how many lower lows and lower highs exist in an uptrend? None. So if I'm going to sell this market and be short for a week or a month, I might as well at least wait for a lower low, lower high, because I know they don't exist in uptrends. So I know now I'm a bear in a downtrend, and I'm probably, and I definitely mean probably, meaning the probability, statistically speaking, of me making money is improved exponentially. So I look at this and say, I understand that a bear might sell this, but a bull might buy that. So I need the breach, the pullback, and then the short. Okay? Okay. Oh, the Memorial Day video? Yeah. Yeah, if you guys could visit youtube.com/FXBootcamp and subscribe there as well. I need to get that to 10,000 people, and then YouTube unlocks some features. I haven't promoted that channel in 8 years or something. But there's some cool things now that YouTube allows you to do once you hit 10,000 subscribers. So I thought, you know what, that might be interesting. So Once in a while, I've been doing weekend webinars there. I think I'm going to rename it, call it Off the Charts. Off the Charts, Fundamental Analysis. I don't know if it's not even fundamentals. It's just shop talk, talking shop with other currency traders, right? But yeah, Chuck says, "Hey, what about U.S. and China? Will that affect risk assets?" Yeah, yeah. In fact, I just explained what to do for about 20 minutes. If that goes down, was that right, Javier? Just is. You know, the biggest thing about reading those things is I want you to understand, because you may not have the experience or sort of the insight yet, but you guys are better traders than most professionals. And the fact that these guys are driving around in limousines all day and you're still Ubering, your skill is better. So what we need to do is get you to a point where you can put a business wrapped around your trading so that you can also trade in your Uber app and pick up a limo. Okay? And you should laugh at when someone says, "I'm going to teach you like how the bankers trade. You need to know how to trade like a banker, like the secret inside knowledge like a banker." I'm like, oh my God, what the hell does that mean? Like, the problem with that is it sets it up like there's some major difference, some deep inside knowledge a banker has, some power, some ivory tower knowledge or abilities that these people have that make them, so, that is so different. Dude, you already know how to, if you know how to trade, you know how to trade like a banker. Right? Except bankers don't piss around and scalp for 20 pips a day, right? Although you'd be surprised, depending on if they're front running their own clients. But it's just silly. So if I do anything, I want to simplify trading for you. And honestly, many of the people that I know, right, in boot campers, for example, they're already better traders than professional bankers, whatever that means. They're already better. So now we got to get the point where you got a business around it. I really don't know, Mr. Connor, why that happens. I don't know. Right? Trade like a banker. Let's see. Do they buy low, sell high? Yep. Cool. That's it. What else is there? Right? I mean, the big part probably with a banker, and I mean particularly a banker, bankers trade on behalf of clients, right? So a banker will get an order ticket on the trading desk and it'll say buy euro. So they buy euro. The difference here is you need to decide whether you want to buy South African Rand or if you want to sell South African Rand in this, what we're looking at, right? Or I guess vice versa, whether you're buying euro here or selling euro here. You need to make your own decision. But like a CFO at a company calls up his banker at Deutsche Bank and says, put in this order. And why does the corporation do it? Well, they just did a deal with a company in Europe. And the company in Europe says, okay, you're going to pay me 3.8 million euro. And so they do an agreement with that. And then the company picks up the phone, calls their banker, Deutsche Bank, and like, hey, Deutsche Bank, send this money over there. That's an actual trade. That's a foreign exchange trade. If it's converted into euro from, let's say, dollars, that's been converted. Okay? Now, so another situation could happen where they're expecting to receive money from Europe. And their agreement was, all right, you're going to pay us now 3.8 million, but it's not going to happen for 30 days. So what if the euro or the dollar changes significantly in the 30 days, or even a little bit could cost you a lot of profit? I mean, if it changes 3%, but you have a 3% profit margin, you went from profitable to not profitable, or God forbid, lose money simply on the foreign exchange, not on the business. So anyway, so you call your banker, Deutsche Bank, you're like, okay, I got this contract. I'm going to be paid in 30 days for 3.8 million euros. Hedge the euro. They're like, okay. So like the corporation, it has its built-in bias based on business need. And they want to lock in today's deal at a price. So then they call the banker, and the banker executes the trade, whether they're moving the money directly or they're hedging the money over time. Okay, you understand that? So now you're putting this together where you're deciding, are you going to sell the euro rand? And if so, how? And you look at this and you're like, well, this doesn't look down yet. Okay, cool. When will it look weak to you? When will it look like it will fall to you? Okay? Yeah, lower low, lower high would be interesting. So now you're making a decision. First of all, you have to make a business decision. That's what I mean by fundamentals, if you want to think about it that way. So if a business decides to do a business deal with someone in another country, is that risk on or risk off? Yeah, because there's a lot of cost and expense and risk involved with that. That is risk on. They're making an investment. They're doing a business deal. Maybe they're building a factory. That's a big risk. But they just might be doing business with a supplier, for example. Okay? So how do you do the business? Well, if you say to the supplier, send me $1 million worth of your products, and I will pay you in 30 days. Okay? Now you got a couple of things going on. First of all, they're not going to get paid for 30 days, but they are going to send 800,000 in product, and if they have a 20% margin, right? And then they're going to get paid in 30 days. So they're giving up inventory for the opportunity to receive cash in 30 days. Should they hedge that? In the sense of, let's say they know they're going to get paid, right? So that's not the risk I'm talking about. The risk I'm talking about is if they get paid €1 million in 30 days, what if in today's euros, that's only worth 900,000 euros? Then they would have lost in purchasing power 100,000 euro. And they're like, oh my God, well, that's a significant amount of money, right? So now they could hedge that. But at least someone's taking risk, and then someone's hedging the foreign exchange. My point is, as a banker, I'm not talking about a hedge fund manager, I'm not talking about a trading desk, I'm talking about a banker. Okay? The banker is given the bias. Hedge this or transfer that. Hey, Deutsche Bank, I need a bunch of euros. And I need you to send it to my company in Holland. Done. Okay? So you have to give yourself that same bias. And you have to think about it. Are businesses doing business in Europe? Is money flowing to Europe? Are businesses in America and other parts of the world wanting to do business in Europe? Are they willing to send money to Europe? Whether to build a factory, to buy some inventory, like U.S. Mercedes dealerships are buying a bunch of Mercedes from the motherland, the fatherland, right? So Mercedes gets shipped to the United States to be sold to American customers, and Germany receives euros. There's transaction. Is that going to happen? Well, if no one's buying new Mercedes this year, no money is going to Europe. Okay? So now you have to make these decisions. And once you've set your bias, and this is what I call risk on or risk off, if business is not going to transact, money is not going to flow across a border. Now, even further, what if you take your money back? You had it sitting there ready to do business. Now you pull it back. Okay? Your European subsidiary had the cash sitting there and you're waiting, right? You bring it back to America. Whatever. It's money flow that we're talking about. So that's why I ask you guys, are you risk on, risk off? Okay? Are Americans buying from South Korea? Are Americans buying from Japan? Are Americans buying from China? Are Americans buying from Germany? Right? Major exporting. Okay? That matters. If those things happen, the dollar weakens. If China is buying from New Zealand, if China is buying from Australia, if China is buying from Canada, if China is buying from Brazil, what are they buying? Typically natural resources. Then the currencies that they're buying from, or the economies they're buying from, will have their currencies appreciate. That's risk on. Now, why would China be buying all these natural resources? Well, they need to build things. Energy to fuel the factories, but also input resources to create things. So like buying iron ore from Australia to create steel because they're building stuff out of steel. Well, why are they building stuff? Because Americans and other countries around the world are placing orders in Chinese factories. So once again, this money revolves. Well, if Americans are not placing orders, then Chinese factories are not placing orders, and money doesn't flow, and in fact could reverse. So one thing I'll challenge you with is look at the balance of trade data for Australia. Look at it for the last couple of years. You'll notice when, we talked about this yesterday in the group, so I won't go into a big part of it, but when you're looking at X minus M, and this was down, but this was up for Australia, the Aussie dollar was down. Okay? But instead, X was greater than. I guess I could do it the other way, right? Let's do it this way. I guess that's why they do this. Okay? So if X is greater than M, then the dollar, the Aussie dollar, right, goes up. If X is less than M, Aussie dollar goes down. So why don't you just do that? Why don't you just pull that up, find the balance of trade data for Australia, and then look at those data sets over the period of a few years and correlate that with the value of the Aussie dollar relative to, like, I don't know, yen or USD or Swiss franc, and look at it and say, oh, there's a high positive correlation or a high negative correlation. and now you know something about that. Okay? That's how you do it. That's how you're successful trading Aussie dollar. But of course, very few of you will actually do that work. And that's not my problem. Okay? I just told you how to be an absolute total success using professional methodology. You can trade like a hedge fund manager. You can trade like a banker. Trade like an insider. You got all that knowledge now. The thing is, will you do it? Probably not. I hope so. I really do. I just gave you the secret to success. There it is. That's what you do. Okay. So I hope you do it. Blue boy, I'll trade anything. As long as you got liquidity. How many people are going to take me up on that challenge? I just want to see. Hey, you put it on MT4 and I'll consider it, KG. So, anyways, I think I'm done for today. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend. Make sure you spend some time with your family. Reintroduce yourself. Hey, I'm your papa. I used to have a daddy once. Right? So, peace on earth. May the pips be with you. May your profits be above average. Please throw Traders Way a thumbs up too. Visit tradersway.com. Open up a demo account. Honestly, 30 seconds of your time shows the appreciation, shows that you care about these webinars. Tradersway.com. I'll see you guys around. Have a wonderful weekend.